Hello Accounting 101 students. In this video, we're going to go over the Chapter 6, question number 3, which really goes over our 3 inventory valuation methods that we're covering in our Accounting 101 course. So in this problem, we are given the beginning inventory, the total purchases that have happened during the period, and the total sales that have happened during the period. And specifically, we're going to be computing the average unit cost and also computing the cost of goods sold under the periodic inventory system for the Fifo method, LIFO method, and the average cost method. So I'm going to go ahead and show my work for how we're going to compute this. I recommend following along and taking some notes while watching this video and pausing as you need to. All right, so the first thing I'm going to start off with is writing out the data in my problem that helps me understand the transactions that I have during the period. So I know that I'm going to start off with my beginning inventory. And I will note the number of units. And I'm also going to notice the cost per unit. And what I want to get at is what's my total cost? And just having these totals really helps identify the information as you go along for a problem like this. All right, so I'm going to start off with my beginning inventory. And for my beginning inventory, I have 2,760 units, and I'm going to multiply that by my cost per unit. So when I purchased that inventory, I only paid $7 per unit. And you're going to go ahead and take out your calculator and multiply out 2,760 times 7. So I'm going to put in the amount of $19,320 for my beginning inventory. And I also have some purchases that have happened during the period. So I'm going to write down my purchases. And my entail during this period 7,810 units at $9. And it's important to note that the prices are rising. What you used to be able to buy for a cheaper price now is costing you more. So when we look at our inventory valuation methods, we also want to look at the implications when prices are rising. So all of my purchases during the period add up to 70,290. And one of the things that you want to do for a problem is to summarize what is your cost of goods available for sale and how many units do you have available for sale. So these are 2 really helpful things to summarize when you're doing a problem like this. So if you take your number of units, 2,760 plus 78,110, you're going to see that this adds up to 10,570 units. And these units cost us in total, we're going to add up both of these amounts of 89,610. So that's going to be our total cost for these units. And so to get the weighted average cost per unit, because some units cost us more than others, we just need to go ahead and take the 89,610 and divide it by the number of units. And you also want to make sure that you round to the number of decimal points that Wiley indicates. So our cost per unit on average was $8.48. The next part of the problem is to compute the cost of goods sold during the period under FIFO, LIFO, and weighted average. So we want to compute it under all three methods. So I'm going to go over the way how I address these types of questions usually. So hopefully this will help you out seeing it in different ways. Okay. So the first method I'm going to do is the FIFO method, which means first in, first out. So what I need to note is I'm going to split this up into two steps. I'm going to split this up between cost of goods sold, and I'm going to split this up into my ending inventory. All right. So first in, first out means that my beginning inventory was sold. And this is how most businesses should operate. So for my number of units sold, I need to see that information in my problem. So if I scroll up, I can see that there was 9,459 units sold. So that's the information. I just want to quickly jot that down. That way I have it as I go through this problem. So the units sold is 9,459 units. So I know that I have sold all of these beginning inventory units, and I have sold some of the units that I then purchased. So my ending inventory is going to reflect what I had just purchased. So I'm going to take 2,760 times 7 each. So I know that my cost is going to be $19,320. Then I'm going to think about how many more units I need to account for in or out of the units that were sold. So I'm going to keep in mind that I have a cost of $9 for those units. And I need to note that I have sold in total 9,459. So that's the units that were sold. So now I really have to solve for my number of units right here that had that $9 cost. So this is something that you're going to be calculating, okay? So you're going to take the difference between 9,459 minus 2,760. So you're going to end up with 6,699. So you're going to take that number times your $9, and that's going to be your cost of goods sold in addition to that beginning inventory. So I'm just trying to make this look pretty. All right. Okay, so we have 60,291. So the last step for your cost of goods sold is just to add up these two numbers. So that's going to be the last thing that you need to do, and you can go ahead and do that in your calculator. And what you should end up with is the number that we have in our problem. Which will be 79,611. All right. The other part of this is I like to do a step 2, and this is just to check my work. Okay. So my step 2 is in some of your problems, you might be asked not what's the cost of goods sold, but what's the ending inventory. So my ending inventory is going to be the units that are remaining. Okay, so this is where you can calculate this. If you have 10,570 units available, if you sold 9,459, that means whatever is left over is your units that are sitting in your ending inventory. So once you do the math, I'm going to do this right now. You should end up with 1,111 units. So if your ending inventory is going to be 1,111 units, you purchase that inventory. Your most recent purchase was at $9. You're going to get to your ending inventory balance. So that's going to be your 9,999. Okay? And I like to do one additional step, and this is really for checking your work purposes, right? This is a really great way of making sure that you did this correctly, you didn't mix up anything. I always recommend adding up the cost of goods sold, so 79,611 plus 9,999, and this should equal your total cost of goods available for sale. Okay, so that's an extra step that I like to do to make sure that I've done this correctly. Okay, so once you've done the Fifo method, then the LIFO method ends up being a lot easier. Okay, so the first thing we're going to determine is your cost of goods sold. So with the LIFO method, this purchase that I just made, which is going to be 7,810 units, I'm going to multiply that by my $9, and I'm going to get 7,290. Then I'm going to think about, well, how many more units in order to get to 9,459? Okay, so I need to once again solve for my number of units in order to add up to the number of units that were sold. And what I'm looking for is 9,459. All right. So I'm just going to go ahead and take that difference. 9,459 minus 7,810. So 1,649. And I'm going to multiply that by my $9 cost, or not my $9 cost. I'm going to multiply that by my $7 cost. Because remember, this is the inventory that I bought a long time ago. So that's going to be 115.43. And then all you need to do is add up these two amounts. So your cost of goods sold should be 81,833. And you can determine the ending inventory very similarly, okay, by just looking at the number of units that are sitting in your ending inventory. So we're going to end up with 111 times your $7 cost. And once you add up these amounts, you can do your step 3, which is checking your work. And then the last method with your average cost, you just need to take the units sold times the average cost. So the last method is the easiest.